Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Phil Tarrant, host of the Smart Property Investment Show. I hope you're well. Talking finance, as I do a couple of times every month with the crew at Finni Mortgages. Eva Loisance in the show with me, principal Finni Mortgages, their senior broker. And today I just want to get into the meat of things. I want to be talking about some stuff that you may not know about if you're self-employed, and essentially what are the new policies for self-employed borrowers, particularly those chasing investment properties. Eva, how you going?
Great, thank you.
So there's misconceptions, maybe some misinformation that if you're a self-employed business owner that you need to have a couple of years of trading before you can get a loan with one of the major banks. So traditionally that was the thought. So people ended up with maybe sort of second-tier banks or non-banks or other lenders. Not the case. Not the case.
And look, we still get a lot of questions around that. People that sometimes they do have 2 years tax return, but one of them might not be great for whatever reason, or maybe they don't have 2 years worth of ABN registration, but yet they have 2 good years, or maybe they just have things they just want to hide in the previous year. So historically, you had to go through, second, third-tier lender to get it done. For quite a few years, though, NZ and CBA have a 1 year financial policy, but that's changing. We're seeing things happening in the space, the Big Four. I just met actually with AMP as well, which has been doing it for quite some time. But we're seeing more and more lenders coming to the party with making it easier for self-employed to get lending and at good rates. Good fees.
So I just saw you and the Finni team in a big meeting with someone. So that was with a banker
AMP.
from AMP. So just let's just look at that really quickly, and for a lot of people who don't actually understand how that works. So banks come to you to tell you about their policies.
Correct. Just to sell their product, to talk about what's new policies, new way to do things, and just remind us.
So this is the point. So this is how brokers, yes, they've got software and stuff, but they actually dialed into the lenders themselves who come to them saying, hey, we're now doing this, we're now doing that. Did you know this? Did you know that?
Yeah, and I guess it's to dig also into that's black and white policy, but what can we actually do on the side?
Okay, so if you've only been in business for a year or you got 1 year of financials, you can now go to a major bank. And that might be, tactically you might want to do it. You might be in business for 20 years and you've had 19 years of bad trading, and then you have one really good year of good trading. Therefore, you can use that. How often do the banks actually go, I'd actually like to see the other financials? Can you go, don't worry about that?
Well, there is, if that's the policy, that technically that's all they can ask for.
Okay.
Right? If, the time sometimes it can be a bit tricky is, for example, if the bank realizes that some business has registered for GST only a year ago and suddenly the profit is, 400,000, it will raise flag because, GST is only available or should be registered over $75,000. So there are ways, there are instances where they will question a bit more. But really, if the policy is this is 1 year tax return I need, that's where they should. That's what they should look at. But we've had clients telling us that the brokers have, by mistake or not knowing, sent 2 years, and then obviously they can't unsee.
So once they've got 2 years, you can't unsee.
They can't see it. Yeah.
Yeah, and this is the idea. Also, a lot of people think, I'll try and get a pre-approval with all 4 different banks. Right, that's not a good way to be going about.
Well, then you've got 4 credit marks on your.
Yeah, and then that is a bad thing if someone is looking at your credit file all the time.
Yeah, well,
right?
they would question why.
Yeah.
Why did you go through? Yeah.
Yeah. Okay.
So, but the big one that's happened recently is you needed a business to be, let's say 2 years since the ABN registration. NZ would do 18 months. Now, NAB came up with, if you've got only 3 months worth of transaction and it's good enough, tax return are good enough to go ahead, that's it.
So this is the point, right? Banks.
So it's huge. That's a huge opportunity for people with new businesses.
And they're giving you competitive rates, like they're not putting
normal rates and nothing different.
So a lot of people think banks don't want to lend money; they make it really, really hard to lend money. Like banks are in a business lending money; they love to lend money. That's what they do. So obviously, policies help give them the frameworks to work out whether or not they will lend money to people. Yep. So let's actually go through some of these bits which make up, and maybe you're not familiar with this, but might make up some.
It's new, as you can see. Westpac was it July?
July, yeah.
Like
so
2 weeks ago,
so
right?
these are the
and
policies.
NAB in March.
Yeah, these are the policies you have. It's cool.
New.
We'll go to a quick break though. Stay with us. Back in a moment. Welcome back, Phil Tarrant, Smart Property Investment with Eva over at Finni Mortgages. Now we're talking about new policy for self-employed with the major banks, and the point is that major banks now will start doing business with you earlier than what they used to. So things have changed, and why have things changed? Well, banks like to lend money. So let's look at some of these big four comparisons, and this is a really good table here, Eva. So 1 year financials accepted. Yes from CBA, yes from ANZ, yes from Westpac from the 1st of July 2025, so very recent. It's only a couple of weeks old. And yes from NAB from the 21st of March 2025. So all the banks now do 1 year
Big
financial.
Four. Yeah. So they don't do it the same way.
Yeah.
They are different. Yeah.
But a lot of the times they look at each other's, they have people in their banks looking at other people's policies saying, should we do that? Should we do that? Yeah. Okay. So 1 year financials for all the majors now commonplace. And this is for self-employed people.
Yeah,
right?
correct.
So people who are sole traders, people who are in partnerships, people that are in PTY or TD businesses, essentially. Yeah. Minimum trading time. So how long is your
But that's a big one.
ABN being registered, right?
Yep.
So CBA like to see more than 2 years. ANZ like to see more than 18 months. Westpac like to see more than 2 years. And here, NAB, no minimum if tax return is lodged.
Yeah. So let's say you started your business in Feb. You had a really good time, made a lot of money, did your tax return like yesterday, and that's enough to get a loan. Off you go.
And will they just annualise
No, they would just
time?
take whatever is on the tax return.
Yeah, okay. But obviously that's your business financials need to support your individual borrowing capabilities.
Yeah, that's right. So
Yeah.
obviously you need to have enough there to get the loan. But think about it, before that, you need to wait 2 years to do that. Or you'll have to go with a third-tier lender on very high interest rate.
Yeah.
And now it's just one set of tax return. You don't even need to provide the financial, just the tax return.
Okay.
Yeah.
So get your tax up to date. It would be the recommendation. So maximum LVR, CBA 80%, pretty standard. ANZ up to 95% with an LMI waiver for professionals.
Yes.
So ANZ's always played in that space, though.
ANZ has always been really strong in that space, especially with 18 months ABN. So that was always where we would tend to put our self-employed that had, those restriction around ABN or only wanted to use 1 year. So really the new Westpac policy doesn't compete with ANZ. But if for whatever reason someone needs to go with Westpac or stay with Westpac, we've got an option now.
Okay, so up to 95% LMI waiver. This for investment properties?
Yeah.
Yeah. How many people are borrowing at sort of 90%, you see? Is that like...
Yeah, very common. For investors, yeah, very common.
It's very common.
Very
See, I'm
common.
sort of maybe a bit disconnected from these days. So I just think 80% all the time now.
No.
But like 90 is pretty...
We've done enough podcasts enough.
Yeah, I know, but I always look through my paradigm and I go, no, I'll put 20% in rather than... So but that changes, like, 10% is a huge amount.
Yeah.
And the LMI obviously capitalising the loan. Obviously, the point is you want to make sure you're buying good stock. Westpac, 80% maximum LVR. NAB, 80%, 1 year, then 2 years required above 80%. So if you...
Yeah, they go back to the normal policy.
So they'll do 90% if you can provide 2 years of
2 years.
financials.
Yeah.
That's good to know. See, I've got to change my thinking again because I'm thinking, I need 80.
Yeah, no.
Okay. Maximum lending exposure. Okay, this is another real sort of bracket. So CBA, 3 million. Is that 3 million with the bank?
Yeah.
Or in,
you can apply for 3 million with 1 year tax return.
in one loan or multiple loans?
Yeah, multiple loans, whatever it is, yeah.
So they'll do, and then after 3 million, they'll start assessing it differently, maybe on 2 years.
Maybe on 2 years, or maybe there's different restrictions.
Okay.
Yep.
So CBA, if I've been trading for more than 2 years, I've got 1 year of good financials, they'll lend me $3 million.
If you can service, yeah.
If you can service it. ANZ, not specified. Sounds a bit grey.
Yeah.
Westpac, 3 million, and NAB, not specified. So it seems to be
on
a
merits,
common thing.
yeah.
Credit score requirement. Not specified for CBA, not specified for ANZ. Maybe we're giving all the secrets away here.
Yes, you do. That was just for you.
No, I'm going to do it. 650 plus for Equifax for Westpac.
Yes.
So let's talk. A lot of people might not actually understand. This is what mortgage brokers do. This
So
is the reason why I'm
650,
going through it.
650 is not great though. So it's not like you're amazing if you get.
What's a
650.
good credit score?
So people think it's out of 1,000, but it's not. Right, we can go to 11, 1,200 more. So 650 is not amazing.
Yeah.
So you would have to be
So you got some defaults there.
not default, but not amazing either.
So I wouldn't even know what my credit score is. Do you know my credit score? Don't say it.
No.
No. How do you find out your credit score? You just go to Equifax, right?
Yeah,
So,
that's
yeah.
Yeah.
And
Very easy to check.
And if you sit around and wait, it's free, or you can pay to get it faster, right?
Yeah, you
know?
can ask your broker to check.
Yeah.
Yeah.
NAB not specified. Okay. So other, I won't go to any more details, but other parts of the policies, debt consolidation allowed. So it means you
Yes,
can
some do, some don't.
throw some debt in income assessment.
Yeah, so some of them will use 100% of the business revenue. Some will only take 90%.
Of the profit.
Of the profit,
Yeah, okay.
Yeah, so something there's restriction there. If you really need to use the whole amount that your business has generated, there might be some lenders that are more.
So this is retained earnings in the business. They'll take that as
not written, distributed to the person.
Okay. What about so if you distribute? So if you're self-employed and you distribute money to yourself, and there's profit left in the business, so there's $1 million of profit left in the business
For that year, you could use it.
For that year,
but if it's from previous years of trading, no.
Yeah, but so if you don't distribute the profit, if it sits in the business for cash flow, they'll still assume.
If it's earned that year,
If
that
it's in
1
that
year
year,
that we use it.
they'll still assume 90%. So whatever you've taken out, they'll take that as your ability to service plus whatever's left in the business
That you earned that year.
for you that in that year. They'll take 90% of it.
Yes.
Okay, all right. So you're not penalised for not distributing profit out of your business. They're saying
in some correct.
okay. And then there's exclusions as well. So
you've got to be, I guess, careful. Like some, for example, Westpac, they don't like to have, if you, like yourself, I guess, if you have different businesses, they don't like that. It's too complicated on 1 year. They want to see more. They would exclude that. So I guess some lenders will still want something quite simple. CBA, in the other hand, they want you to have a business account with them.
I'll do that.
Yes. So it's
they'll say you need. So if you give me your business banking, we'll give you a home loan.
Yeah, but it's quite light. I've had clients just opening a business account, putting $5 in it, and they tick the box.
Move on.
So there's things to know before you apply to make it work or not, and depending on, I guess, your situation, some lenders would be better than others. But the big one there, I think the big one is NAB for anyone starting a new business and doing well. You don't have to wait 2 years, or you don't have to be stuck with lenders on 10%.
So the secret of mortgage broking then is understanding all the nuances about a client and then mapping against, and this is just some of many different policy aspects of it. So you need to know all this stuff and you go, okay, it works there, it doesn't work there, works there, doesn't. There's always going to be compromise somewhere. You're not going to get it perfectly lined up, but you'll be able to go through and work out, okay, based on your circumstances and what your objectives are, the best person to go to is with NAB, however, ... Okay.
Yeah.
So let's look at this, the sort of summary of this then. So most people, all people are familiar with the major banks. So let's just give the final sort of conclusion of this. We'll just go to another break. Stay with us. Welcome back. Phil Tarrant, Smart Property Investment Eva at Finni Mortgages. Now, in the balance of all this sort of stuff, there's going to be some level of compromise with all the major banks if you're a self-employed borrower. So you've got to work out what is the best compromise for you. So CBA, you've told us here, Eva, which is great for clients with strong personal income and a CBA bank account.
Yeah, which is second condition can be ticked pretty easily.
Yeah, okay. And a strong personal income is what they're able.
Yeah,
is it the income in the business or what they take from the business or both?
Again, whatever you pay yourself as wage, salary, dividends, consultation fees, whatever it is, that's fine. But it has to be strong for that 1 year.
Okay. Plus whatever profit you haven't distributed from that year of trading. Okay. ANZ, ideal for high LVR with tight servicing. Yeah, that makes sense.
Yes, and the good thing about ANZ, they take 100% of everything that's there. So
ANZ sounds like they're the leader that most wanted service.
They've always been really strong in the self-employed space.
Yeah,
so that's
they're
not new for them.
Yeah, okay.
Yeah, not new.
Do you reckon they're sitting there going, I wish these other banks left us alone? We used to dominate all this sort of self-employed lending. Westpac, strong fit for high scorers and growing businesses post-COVID.
Yeah, so if you've got, someone that had 23, that's not too good. 24, picked up, well, then you don't want to show 23. And if you've got a good credit score, that will work. Again, they only take 90%. So Westpac is not playing really hard in that space. But there are instances where we have to go there because, whatever reason, someone is already with Westpac, they're on a fixed rate, they want to stick with their bank, they've got better valuation. There's a lot of reason why Westpac might be the right fit. Yeah. They're not the strongest in the 1 year financial, but if, let's say, they have the highest valuation and we can get equity there and we need the 1 year, we can make it work.
You can deal with it. And this is the point, if you're self-employed and you just go directly to your bank, who is you bank with for your business, you're going to get a very restrictive, you're probably going to get told, and it happens a lot, you're told no. You must get a lot of people coming to you saying, my bank told me no.
Yeah, that's right.
So there's always another way.
Yeah, and it's like, once you know that, you got no here, but that's a clear yes there. So let's just move.
Do people get annoyed when their banks say no and they go, I've banked with them for 20 years, they should be loyal, and why don't they,
I've been a good client, I always paid on time.
Yeah, often it's the best way to get better outcomes is to
move. Yeah. It is.
And NAB is the fastest path for clients with a freshly lodged return and clean structure. So if you're new to it,
someone just created a business and did well, good tax return. We don't even need to show financials. So if there's debts in the business, whatever, they don't see it.
Really?
Big one. Tax return only.
They only need to see the tax return.
Tax return.
They don't need to see balance sheets.
They don't
or
need
anything.
to see financials.
Really?
Yeah.
Okay.
Yeah, big one. That's a big look. I only put the big four there. AMP is quite strong in that space as well. There are others. We would like to see Macquarie coming to the party, but it's not on the card. It's a shame because Macquarie could be really.
Yeah, I've had and have loans with all of them, including AMP. So and competitive interest rates. So you're not penalised for being self-employed. So PAYG or self-employed, you can if you're investing in as an investor, you get the same rate.
Yeah.
In a trust, same rate.
Yes,
yeah.
Some of them.
Got to speak to your mortgage broker.
Go back to your mortgage broker.
All right. So that just gives a sense for.
Yeah. So if you self-employed that might just start the business, that's the first time ever I can say it doesn't matter how long your ABN has been running. If you have 1 year of tax return, let's go and you can get good rates. So that's pretty exciting.
Well, if that sounds good, give Finni a call. What's the best way to track you down?
Yeah. Finni.com.au. You can book a time right there in 2 minutes.
FINNI.com.au. All right. Thanks for coming in.
Easy.
It's good. I like this sort of stuff. I think it's nice to talk strategy and stuff, but it's also good to talk really
good
sort
policies
of policy
and we hope that's going to move other banks as well to come to that.
Well, more and more Australians are sort of setting up sort of self-employed, and a lot of people have gig economy workers, right? Typically are setting up their own ABNs and all that sort of thing. So lenders are starting to understand how the way in which Australians are working is a lot more fluid to what it used to be. Non-traditional employment, which is a 9-to-5 job with a pay slip, it's not as common as it used to be.
Correct.
So banks finally keeping up. Thanks, Eva. Good to see you.
Thank you.
Nice. I hope you like that, everyone. Remember to smartpropertyinvestment.com.au. Heaps of stuff like this. Or social media as well. Smart Property Investment. You can track us down, find us there. Please keep the reviews coming wherever you're tuning into this. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.